Sweet and sour. That's about how I would describe the market as of late. So the question is, what can we expect as we move forward? So stick with me as we dive into the details. My name is Brian Cannon, and welcome to Markets in 5. So since our last episode a couple weeks ago, there's been a lot of drama in the markets, we'll say. So there was a major pull down, which took out a lot of our support lines, found some support right around the 100-day moving average, and then took back off. So where are we now? Let's dive into this a little bit. So you can see that, just to recap, we had our nice up channel trend line that got broken. It came down, found some support right around the 100-day moving average, came back up. And again, what was support on the downside then becomes resistance on the upside. So it came down, broke it, tried to break back through to the channel, couldn't, fell back down to the 100-day moving average, broke through that, bounced around, found some support, and then took back off last week. So you can see that the downtrend line, where it was lower highs and lower lows, reversed itself and started to head back up. So where are we now? It's important to note that we're right back at that level of resistance. Now, what's interesting is the sweet part to the sweet and sour is the fact that we're now at all-time highs. So the S&P did break out, and we are above the prior high right here, the green dotted line. We broke through that. Now, the sour part to it is we're back to that level of resistance. So you can see that nasty little black candlestick right there could not break back into this channel line. So again, what was support at one point now becomes resistance. So it's going to be important for us to eventually break back through and get back into that channel. Otherwise, if we can't hold this upward trend that we've got right now, then we run the risk of this becoming a double top and falling back down. So again, if it tops there, comes through, breaks through, and it's kind of a head fake or a false breakthrough and breaks back down, then you could imagine that that the S&P is going to come back down to this 4,500 level pretty quickly, and probably find some support at the 50-day moving average, and then eventually the 100-day moving average would be another level of potential buying. So, and again, if it can't eventually hold this support here from the recent low, then that would mean that the lower trend is back in effect. So, but we can't say that yet because the S&P has broken through. So now we just want to see, can it hold that green line? But the RSI is heading up, the MACD, everything looks positive. So, I don't think there's anything dramatic to worry about at this point. But we just need to watch these levels and just make sure that this upward trend is intact. So when we get into the NASDAQ, same situation, but a little bit differently, right? So the RSI is definitely breaking back above positive territory, as is the MACD. So that's all good signs. And you can see here as well, the 100-day moving average has held throughout the most recent couple of years pretty consistently. I mean, so it's broken down, given some false breaks, and then it pops back up. So it's done this consistently throughout several times throughout the last couple of years. So this time was no different. Came down, broke it, bobbled around, found some support, and took back off. And so again, the only difference is, as opposed to the S&P, which is broken out to new highs and is now, in jeopardy of coming down and testing those highs. The NASDAQ is, it came up yesterday on Tuesday and basically hit the all-time high but couldn't break through it. Kind of had that nasty candlestick there as well. So to me, this looks more like a double top. So again, if the S&P can't hold its breakout and drops down, and the NASDAQ can't break through that resistance zone either, again, I would anticipate it coming back down and reaching the 50-day moving average and finding that support. So there's several levels of support here that correlate with not only the price action but also the moving averages. So I think everything is, as of right now, fine, but we just need to watch these levels and make sure this doesn't double top and break all the way down. So in summary, you can see there's definitely some sweet and there's some sour. So we just have to continue to watch the levels and just make sure that the sour doesn't overtake the sweet. So if you have any questions, by all means, give me a shout, and look forward to seeing you on the next Markets at 5.